From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 30th, 2017. In just a moment, we'll be taking a look at the AUDUSD, the Australian dollar versus the US dollar, for today's trade analysis. But first, I want to recap a couple of the suggestions made over the past few days. First off, starting here on the USD JPY, the US dollar versus the Japanese yen. This was yesterday's morning analysis video. We talked about buying on signs of reversal, dips into support, breaks of resistance. Those are reasons that we're going to look for buying here on the US yen. As you can see here, down here in the circles, where we really want to concentrate on. Left-hand side of that circle, under the black trend line, found a great deal of support. This is the 4-hour time frame, so multiple hours found support at the blue shaded area. Then it made one final push down to the yellow zone. A second push down to the yellow zone, a little bit higher low than the first low, and then it made that push all the way up back up to the blue zone. So now we're sitting back into the blue shaded area. That was support over here on the left-hand side of the circle. So yesterday we were looking for buys. Right around 110.85 was the opportunity to go long. 110.90.85 was the opportunity to go long. If you got in, you had an opportunity to see profit. In fact, from the 85 level, we saw the market push about 50 pips higher from the bottom of that blue zone over the past 24 hours or so. It's come back a little bit. We're currently sitting about 29 pips on our buy order from 110.85. I actually got in two times, 110.90 and 85. I've closed the 110.90 trade with profit just to guarantee that we're going to win on this trade, and left one on. This one is currently locked in. The stop loss is locked into profit by 5 pips, so I can't lose on the trade, but I would definitely like to see another surge positively for the US dollar, taking a turn back to the green zone and continued reversal here for the US yen. If it doesn't, breaks down through the blue zone, we'll get out of it and look for another opportunity. Over the past few days, we've also held 3 other trades: New Zealand dollar, GBP USD, and USD CHF. We have reviewed these multiple times over the past few days and in the live trade room. I would definitely suggest, if you want to hear more about them, you could join us later on today in the live trade room. Let's move on over to the AUDUSD, the Australian versus the US dollar. Let's look at history first. Look at this. We're on the daily time frame. I've zoomed out so we can see an entire year, going back to March of 2016 on the left-hand side of the chart. The probability, or fact, really here, if you really look at it, each one of those black circles, or each one of the circles on the chart, has shown us resistance as the market approached the top of the chart. Resistance at the blue zone, resistance at the green zone at the top of the chart, mostly the green zone, but blue zone as well underneath the green zone has shown resistance into this level for an entire year. There's really only been one instance back in April of last year that got above that green zone. So most of the time we have seen for the past year it hold under resistance in that area. So as long as it's underneath there, I have a very difficult time going long or buying this currency pair. I don't want to buy it as long as it's underneath that blue and that green zone, because history tells us it's high probability resistance. So if I'm not buying it, it could become an opportunity to go short and look for a reversal, just like it has for the entire past year. Let's go ahead and zoom it in a little bit here on the daily. Let's go in a couple of times so we can see what's been happening even over the past few months. We saw resistance at the black circle at the green zone. We saw resistance at the blue circle at the green zone. In fact, we sold it at the blue circle and made a good deal of profit on the way back down. So that was our first opportunity. Now we've seen it come down to the purple zone, 7,600, make a little bit of a rally back into the blue zone, back into resistance. Look at the blue box on the left-hand side. There's a blue box or rectangle back here. You can see the blue shaded area. 1, 2, 3, 4, 5, 6 days found resistance at that blue zone, under that blue zone and into the bottom of that blue box, or top of the blue box. Well, I bring that up because that's where we are now. We're in that same area. If you look along that blue shaded area, you see support, you see congestion, you see resistance all along that area. 76.75, 76.90 is that blue zone. So we know that there's factual resistance at the green zone. There's factual support, resistance, and congestion at the blue zone. It's just a very difficult place to consider going long. So again, if we're not going to consider going long and there's this potential for reversal, that's what we want to look for. In fact, this, if it does find a resistance high here again, we're looking at a lower high. And again, lower highs could be a sign of things to come and a reversal here for the Australian dollar. Zooming in one more time. There we are, getting into it. There's the blue shaded area. Again, we don't want to buy it under that blue zone, or under that blue zone, because the potential is for resistance and reversal. The only reason we would expect it to go up to the green zone is what? It would have to break through the blue zone, which it hasn't done. So if we're going to trade it, if we're going to buy it, let's go with that first. If you're going to buy it, it needs to break through the blue zone. Don't do that right now. If you're going to go short, though, we're approaching that level right now, anywhere between 76.75, 76.90. It's not a very big zone. It's very small, actually. So we don't have a lot of risk on the trade. It's only about 15 pips between 75 and 90, right? So there's not a lot of risk. Your stop loss would go just above it, about where the red line is, maybe a little bit higher, to protect yourself in case the market goes up to the green zone. So we have a fairly minimal risk, and our potential reward, and if I don't think the orange zone is a good place to target, but if we do get the breakdown and it goes down to the purple zone or lower underneath that black box in that last low, we could have a significantly profitable trade back down into the lows, even all the way back down here towards 7,500 and that low down here. So again, I think it's an interesting area for a potential short. Fibonacci from the high down to low, high at the blue circle down to our current low, puts the 618 Fibonacci retracement level also in there. Right about 76.85 is where that 618 fib sits, right inside the blue zone. So we have a backup there to tell us that that could be potential resistance. And again, look back to the left. We've seen this before. Off the green zone, resistance under the blue zone, and a continuation lower. So I'm looking for the short. 4-hour time frame, again, gives us somewhat of an opportunity to look for that into the blue shaded area. We've seen it here. Look at this. Resistance here, support here. So again, we're looking at this blue zone. We're watching for evidence of reversal, dipping its head into that blue zone and then falling off of it quickly and rapidly with an infusion of sell orders would be evidence of selling pressure into that blue zone. All of that would give us improved confidence that we're looking for selling the blue zone, targeting the orange, and of course better the purple zone or lower for the Australian dollar, and our risk is just above the blue shaded area for the day today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.